Okay. Now, don't panic. Markets are having a little bit of a rough day. They did just have some really good days just previously. So there's going to be a little bit of down along with the up. Let me get you caught up on what happened today. Welcome back to Kyle's Financial News. I'm your host, Kyle. Today's date is July 24th, 2024. I kept checking the market throughout the day on my phone, and it just got worse and worse and worse. Indexes just got brutalized today. The Dow Jones is down 1.25%. The NASDAQ is down 3.64%. The S&P 500 is down 2.31%. Well over 120 points. The Russell 2000 is down 2.15%. I'm looking at the stock screener here. The heat map is just glowing red and not that light kind of amber burgundy red, bright red. We have Tesla is down 12.3%, Microsoft 3.5%, Nvidia 6.8%, Apple 2.8%, Google 5%, Meta 5.6%, Amazon 3%. It's just rough out there right now. Tech is getting absolutely hammered. Fundamentally, nothing has changed, right? The Fed has gone silent while they're determining if there's going to be an interest lowering rate event at the end of the month here. And if we don't get that, the market may not react very positively to that. We are starting to see from these earnings with these larger companies coming out, they're starting to feel it a little bit. They're starting to feel some of that tightening, which is what is expected. That's what we want to be happening in the name of lowering inflation and getting back towards that 2% target. There's just a little bit of uncertainty right now on how strongly that is playing a part. So there's a few things that will either start to calm this down or reverse course. Now, historically, this third week in July is typically a pretty painful week, but July itself is also supposed to be a pretty bullish month overall. We were expecting to be ending the month near positive 4% on indexes. We actually came pretty close to that at one point. We were up about 3.8%, 3.7% on the S&P 500, and then it rolled over and started to come back down. I think we either start to see some better, more positive earnings with some decent forecast for the rest of 2024, or we're going to have to wait for more economic data to show that we're not accelerating too quickly in the name of getting to that 2% inflationary target and slowing down the economy. We do want to be deaccelerating a little bit, but not too quickly. We don't want to be approaching severe recessionary hard landing type levels of slowdown. So now a lot of people will argue whether or not we are or are not in a recession, and I'm one to believe that we are in a recession, though a very light one. It's pretty smooth sailing so far. It's been pretty gentle. There is some tightening going on, but it's not so hard that there is panic and mass sell-off and people needing to seek money from their stocks and empty out their bank accounts and all that stuff. It could certainly be worse. And I think just the word recession in itself already just has such a negative connotation. We can't even have a discussion about it without everybody saying, oh, no, we're not in a recession. There's no way we can be. Other people saying, absolutely, we are in a recession and everybody should be panicking. It's only going to get worse. I think there's a little bit of a fine line. I think there may even have been times over the last year where we've technically dipped into recessionary definitions and then come back out and then dipped back in. We're just right, kind of just balancing. So what I'm looking for going forward in the next week or two here is economic data that reflects that we are still slowing down, but that the slowdown is not accelerating. And we will also have to wait to see what the Fed does next Wednesday, but more importantly, what the Fed says. If the Fed starts to indicate that the data is looking good, we can consider lowering interest rates here soon, or if not this meeting, then possibly the September meeting. That could be what rallies us right back up and out. That's the Federal Reserve saying relief is on the way. Companies are going to take that and run with it. Now, I'm not too confident that Jerome Powell will be saying such language. We're still seeing some pretty good consumer spending numbers. People are still buying houses. People are still buying cars. People are still out there buying vacations, buying airplane tickets, buying travel, buying Luxury is starting to feel a little bit of that impact. We've heard of some luxury brands in the last week or two starting to really feel it. We should, with time, a few more months, start to see that more and more, possibly in those other sectors. But I just don't think the variables are quite all there for the Fed to feel confident, as they say they want to feel, for them to actually start lowering rates consistently. Now, looking back at the indexes again, the S&P 500 is down about 5% now from its very recent all-time high that just took place a week ago. While it is very quickly happening, I don't think it's quite cause for panic. Like I was saying, fundamentally, nothing has really changed this week versus 2 weeks ago. Economic data is still just kind of trickling into the Fed's favor zone, and we're not seeing anything is breaking. Nothing has significantly broken. Nothing has really significantly changed. And along the way up in bull markets, we're going to get these quick, sharp sell-off declines. That is completely natural market behavior. And once a red day turns into 2 red days, turns into 3 red days, you're going to have mainstream media saying, is this the top? We're calling it. Bear market is here. All that normal stuff. And then we bounce right back up on and out. Now, I'm not a perma bull, let me be clear here. When the conditions change, and I think it's more appropriate to be focusing on holding some cash versus being mostly in the market, I will most certainly be vocal about that. So hang tight. I know today was action-packed. I want to see what ends up coming out tomorrow and Friday, and we will have to just continue to stay closely tuned and monitoring news as it comes out, but nothing new significant yet to report on. So thank you so much for watching. Please consider liking and subscribing, and I will see you tomorrow.